Over the last several years, the BRICS economic alliance has enjoyed tremendous growth in the geopolitical sector. The bloc has continued to focus on expansion, increasing its size by 5 nations at its most recent 2024 summit. The main goal has always been to improve each of their country's economy, and they have been succeeding. Each of the BRICS Plus nations is trading with each other using local currencies, completely bypassing the dollar. China has been leading the charge. This analysis uses Bloomberg data on the share of China's payments and receipts in RMB, USD, and other currencies from 2010 to 2024. In the first few months of 2010, settlements in local currency accounted for less than 1% of China's cross-border payments, compared to approximately 83% in USD. China has since closed that gap. In March of 2023, the share of the RMB in China's settlements surpassed the USD for the first time. And now China and the rest of the BRICS Plus want to expand. Specifically, China has recently discussed its focus on economic growth. A key part of that endeavor has been its focus on improving trade relations with the European Union. That focus is likely to extend to the economic dealings of the BRICS alliance. If that does come to fruition, it would represent a massive blow to the dollar. The greenback is already nearly extracted from all trade dealings between China and Russia. Moreover, the BRICS Plus nations have been focused on increasing gold accumulation, seeking other asset classes to hold in an effort to diversify the nation's finances. Those tactics will undoubtedly come into play within both China and Greater BRICS trades with Europe. Xi Jinping just concluded his European trip, visiting France, Hungary, and Serbia. While we won't see the results of the visit until months from now, we know that he signed dozens of agreements with the three countries. US dollar's troubles. If BRICS Plus expands to Europe, we can expect the following: reduced demand for the dollar. The US dollar is currently the world's primary reserve currency, meaning it is widely used in global trade and held by central banks as part of its foreign exchange reserves. If BRICS Plus countries use their own currencies or an alternative currency for trade, the global demand for the US dollar would decrease. This reduced demand could lead to a depreciation of the dollar's value. Impact on U.S. borrowing costs. The U.S. benefits from lower borrowing costs because of the high demand for its currency. When other countries hold dollars and invest in U.S. Treasury securities, it keeps interest rates low. If demand for the U.S. dollar falls, the U.S. might face higher interest rates, increasing the cost of borrowing for both the government and private sector. Loss of economic influence. The dollar's dominance gives the U.S. significant economic and political influence. For example, the ability to impose sanctions that leverage the dollar's global role is a powerful tool of U.S. foreign policy. If BRICS Plus successfully bypasses the dollar, it could diminish the U.S.'s ability to use such financial tools effectively. Trade deficits and inflation. A weaker dollar could lead to higher import prices, contributing to inflation. Additionally, the U.S. runs large trade deficits financed by foreign investments in dollar-dominated assets. Reduced demand for the dollar could make it harder to finance these deficits, potentially leading to economic instability. Geopolitical shifts. The move by BRICS Plus to bypass the dollar could signal a shift in global economic power. It might encourage other countries to reduce their reliance on the dollar, accelerating the transition to a more multipolar financial system. This shift could undermine the U.S.'s global economic leadership and reduce its ability to shape international financial policies. Gold can save you and America. The talk of the US dollar collapse has been around for decades, but this is the first time there's an actual geopolitical development supporting the claims. America has to fight to the death to keep our financial dominance, and the first step is to protect our own future and the future of our families. Many billionaires are doing the same thing. Central banks are doing the same thing. They are protecting their wealth with gold, lessening their dependence on the US dollar, ensuring that if things go south, they will be able to contribute to the economy if their own future is secure. Protect your wealth, protect your family, protect America, invest in gold.